To get started, and the meeting's being recorded. So good morning and welcome to the Kushner Report. There's Robert and I under masks today. And welcome to the Kushner Report for April of 2023. And at the conclusion of the presentation this morning, you'll have an opportunity to participate in our Q&A session. So today's agenda, we're going to take a look at the key economic indicators, the global economy, the domestic economy, mergers and acquisitions, other significant economic news, and what's ahead in 2023. Today, we're going to take a look at the supply chain update, and then we'll take a look at the biotechnology outlook for the year. So let's take a look at the supply chain situation where we are today. So basically, the current supply chain situation in the United States still remains complex and dynamic, with an ongoing challenges and disruptions impacting businesses really across a wide range of industries. And there's still a lack of reliable transportation and shipping capacity. Cost and logistical challenges of implementing new supply chain design, contingency planning, and issues with technological solutions. So these are still issues for our country. And experts indicate there'll be a shortage of warehouse space throughout 2023 because supply continues to outpace demand. So throughout the third quarter of 2022, U.S. industry vacancies rate remains still high at 3.2%. One of the major issues affecting the supply chain is the ongoing COVID pandemic issues, which continues to cause significant disruptions to global trade and logistics. And despite really what I would call widespread vaccine efforts, many countries are still experiencing waves of infection and implementing measures such as lockdowns and border closures that still impact the movement of products and services. And in addition, the ongoing shipping industry is facing a variety of challenges, including shortages of shipping containers, congestion at the major ports, ongoing supply chain disruptions really caused by the weather events that we've seen, and geopolitical tensions across the world. And there are many also ongoing events taking place where there are still key shortages in semiconductors, for example, and materials that are really impacting a wide range of industries, including automotive and consumer electronics. So I have a Subaru and I have a defective radio, which is on recall, and I haven't had one now for six weeks. It's on back order. So there's an example of a lack of technology of chips that are built into the radio, so I can't use it. But overall, the supply chain outlook of the U.S. remains complex and challenging, and businesses needing to stay agile and adaptable in order to navigate these ongoing disruptions and uncertainties. But the clear and concise focus in 2023 really revolves around resiliency and optimization, efficiency, if you will, of a lot of and back to normalcy. So conditions are expected to improve from what we saw in 2022 and 2021 moving forward. What's really critical of our procurement organizations really have to look at sustainability and strategic outsources and vendor relationships and risk management as we move forward in the year. Now taking a look at the biotech outlook for the year. Overall, the biotechnology sector in the United States is expected to continue to grow substantially in 2023, driven by several factors such as advancement in technology, increasing demand for personalized medicine, and the growing aging population. If you think about this, pharma and biotech merger and acquisition activity will continue to focus on oncology and immunology, but there's other areas too, such as the central nervous system, cardiovascular diseases, as well as vaccines, and we'll see interest, if you will, in expectations for more investments. If you look at what we've done so far, and I'll talk about it when we get into M&A, a lot of M&A activity taking place now, a lot of consolidation, almost on a weekly basis. You're going to see more of that too. A lot of these companies that have specific kinds of drugs, they come to a period where the patent expires, and Mr. Crody knows this. So what happens when they expire, it becomes a generic drug. And therefore, if you're in business, you need to find new drugs or new opportunities to continue growing your business. So some of the key activities here, for example, you look at medtech sector continues to face headwinds with deal values down significantly from 2002 and uneven capital market performance. And experts predict basically that it remains optimistic about the 2023 prospects for this sector. The service sector will continue to see healthy M&A deals in 2023, and we're seeing achieving scale will be critical in various subsectors. So, for example, in differentiated contract development, management, and organizations and contract research, we'll see that continue to thrive throughout the year. What's interesting is that we see a continued investment in funding. So the biotech sector has been a hotbed of investment activity in recent years, and this trend is expected to continue throughout 2023. We're also seeing gene and cell therapies have gained momentum in recent years and are really expected to continue to be a major focus for biotech companies this year. This includes the development of new treatments for cancer, rare diseases, and of course, genetic disorders. And of course, the use of artificial intelligence and machine learning and drug discovery, and of course, the development is expected to continue and increase in 2023. These technologies can also help accelerate drug development and improve the process in successful clinical trials, and hopefully expedite the process through the EPA process. We're also going to see greater collaboration between biotech and big pharma firms, and basically expected to continue this as we roll through 2023. And of course, there's a growing awareness that the environment impact of the biotech industry and companies are expected to focus more on sustainability, the word that's overused, in 2023. This includes reducing waste, minimizing the use of harmful chemicals, and developing more eco-friendly systems and products and processes throughout the area. Overall, the U.S. biotechnology sector is expected to continue to be a major contributor to innovation and growth in the healthcare industry this year and beyond. However, with any industry, there are risks and uncertainties such as regulatory challenges, geopolitical instability, and of course, the shifts in market demand that could have an impact on the outlook going forward during the year. So there's still a lot of moving parts, but in general, the sector looks very strong going forward. Now let's take a look at the key economic indicators. So I want to address the gross domestic product, inflation, unemployment at both the federal and the California level, and then the price per barrel of oil. So if we look at the key economic indicators, you can see the asterisks represent changes from our last call. So first of all, if you look at the full year GDP for the global market, it's looking at 2.2% and then dropping down to 2% next year. Again, lots of concern about economic growth and possibly recessions throughout the world. The U.S. economy is looking at this GDP this year is at 1.2%. This morning, while all of you are sleeping, they came out from Washington, and what they said now, the market, annualized market for the month of March is now looking at an accelerated, where we'll see GDP growth now down to 1.1% for this year. And there's concerns that inflation is still coming back. So we'll have to see how that ends up. And that's for the first quarter of 2023. We look at the GDP next year, again, looking at 0.2 of a point, that's correct. And that's based upon the downturn with the economy in the United States. If we look at the inflation factor here, we're looking at possibly going out the end of this year at 4%, then dropping down to 2.4 next year, probably by the end of 2024, and maybe getting some kind of reality in sometime in 2025, unless things change. The unemployment factor across the country is going out about 3.9%, and next year rising to 4.9%. California, again, is looking at 4.5% this year, and then next year around 5.1%. In the area of oil, and we'll talk more about that later in the presentation, there's still the ranges between $80 and $100 a barrel. So let's take a look at the global economy. So first of all, OPEC Plus made another surprise recently. They decided to curtail another 1 million barrels of oil. So Saudi Arabia basically cut their production by 500,000, and the other countries such as Iraq, Kuwait, and UAE, and Russia are also contributing to another $500,000 down. So last year they mentioned 2 million barrels a day, and now it's down again. So we may see prices rise later in the year unless we see more oil coming out of the United States for our own economy. Now, the Bank of Australia, basically the Reserve Bank of Australia has paused its monetary lightening in April, basically holding their rate at 3.6%, so they're not raising their interest rates. If you look at Canada, basically Canada's economy has made a solid start in 2023 with sturdy employment gains over the first 6 months, and monthly GDP is still promising. However, economists still believe that 1.1% growth for the year in GDP is now the forecast, and that's down from what we saw 3.4% in 2022. So their economy is contracting. If we look at, the economists believe that the global economic conditions have tentatively stabilized, which is important. Now, China's growth prospects are robust and contributing to positive global economic momentum. The good news is their GDP is now projected to go out about 5.5% this year, and that's up from the 5.2 that was earlier predicted. Now, taking a look at the domestic economy, as you recall, last month, what we saw happening here is the fact that First Citizens Bank acquired the remaining assets of Silicon Valley Bank, and that was possibly the worst downturn bank failure we've seen since 2008. And that was when I think the last one was Washington Mutual Bank up in the Bay Area. But what's happening is the deal includes $56 billion in deposits and $72 billion in liability. And the cost basically was $20 billion to get the deal done. Now, this is somewhat alarming here. So U.S. banks have written off $3.4 billion in bad consumer loans. And the latest to join the group was Bank of America. The concerns are here that U.S. lenders not only wrote off the $3.4 billion, but this is a 73% increase year over year. Now, there's still concerns about a couple more larger banks, but the middle market banks, there's a lot of concerns there. You know, First Republic, there's issues coming up about them. And also there's concerns with some of the smaller regional banks. And perhaps we'll see more of this taking place as we go into 2023. If we look at the labor market, it's strong, but it's loosening. Data from March broadly added evidence that the labor market is loosening, and employers have added jobs, but at a much slower pace in 2023. And the job openings fell. An upward trend in the area of initial jobless unemployment has emerged as well. So we're seeing that slowing down as we talked about over the last couple of months. Now, there's rumors on the US dollar and its status. So over the last few weeks, headlines around the United States, a US dollar was losing its global reserve currency status, have become widespread and captured attention from everyone. Well, let me tell you what, the experts indicated that the US dollar is not on the brink of losing capital reserve currency status. It's meeting all the current characteristics of a strong currency dollar, and it will continue to dominate currency markets across the country and across the world. So that at this point, the currency of choice again is still the US dollar. When we go through it, recessions, depressions, etc., the United States is the place where a lot of these foreign investors put their money. So we're solid as a rock. Now, going forward, economists believe that the dollar will maintain its status as a reserve currency. As if you look at the European common market, there's a lot of fragmentation and risks taking place, which is preventing really the euro from getting off the ground and gathering momentum. Now, the US dollar reserve is under false scrutiny as well. In recent weeks, we talked about the reserve factor here, and some analysts predicting the demise of the greenback. Well, guess what? Again, that's false. Such speculation has really occurred because China and Brazil discussing using their own currencies to interact with goods and services, but that's just a small example. Now, let's take a look going forward at some of the other economic indicators. So first of all, we have inflation. Well, the inflation rate dropped down to about 4.9% compared to 6.4% from a month ago, but that's down from 8.5% that we saw last year. So we're moving in the right direction. You know, keep in mind, in March, by the way, for those of you that like to eat real food, inflation on food was up 9.5% in March, which is pretty substantial. Keep in mind, when you look at core inflation, it does not include it only includes, if you will, cost of goods and services, but it does not include food or energy. So that's a kind of a misnomer in that area. But you got to keep in mind, if everything goes down, you're still paying a lot more for food and gasoline. Now, the wholesale index number, which is good news, it dropped down to 2.7% for the first time in a long time. And that's it's up about 4.9% over a year ago, but it's dropping down, which is really important. The trade exports went out about $252 billion. It's about $7 million less than we saw in January, but being up to $250 billion and above is a good sign for the economy. The trade deficit, go back a few months ago, you remember when we were talking about $91 billion? Well, the good news is it's still running around $71 billion, up a couple of $billion over January, but it's moving in the right direction. Retail sales, we saw a surge, if you remember, about a month or so ago, and that was temporary. Sales, if you will, the increase was for the second month in a row down 1% in March. So that's slowing down. Now let's take a look at the employment picture. So payrolls were somewhat anemic compared to what we've seen months ago. We saw across the board in the United States, we saw 236,000 new jobs created, and the unemployment rate dropped down to 3.5%. If you look at such areas as like business, professional services, were very strong, along with health and education, leisure, and hospitality, which were the two vertical markets that took the biggest hits during the pandemic. The negative aspect I want you to look at here is construction was down by 9,000, financial services was down, and you saw a negative in manufacturing, and of course, retail was down by 15,000. So those are key sectors of the economy that are showing job losses. Now, if we look at the state of California, it's somewhat anemic. Dropped down, the payrolls were at 8,700 in the month of March. The unemployment rate increased to 4.4%. Look at these particular sectors. If you look at administration, construction, finance, and real estate, all had negatives, all had layoffs, more so than hiring. And of course, government added almost 7,000 jobs. So the only two areas of real gain were leisure and hospitality and healthcare and education. So that's where the employment picture looks right now as we go through the end of the first quarter of 2023. Now, looking at if we look at inflation, for example, as I mentioned earlier, we're still seeing inflation, and it's going to continue on. But now let's take a look at, for example, let's look at the interest rates. So the interest rates, basically, expectations are that the Federal Reserve will meet again in May, and perhaps will raise interest rates one more time by 25 basis points, and then we'll see it flat, hopefully, throughout the rest of the year. Sometime in 2024, they'll open up their toolbox and start reducing interest rates again, like we've seen in the past. That's the plan right now. That's barring anything happening unforeseeable as we go through the rest of the year. The mortgage rates, the good news is that they dropped down to 6.5% on average last month, and that's down from the 7% that we saw almost a month and a half ago. The concern I have, the concern most people have, is in the area of manufacturing. The index shows that we're in a contractive mode right now. And the index showed where manufacturing index went down to 46.3 last month. That's down 1.4% from the month ago at 47. And as we've talked about before, anytime the manufacturing index is below 50 basis points, you're either going into a recession or you're in a recession. So that's a key barometer to watch as we go forward. Factory orders fell last month by 0.7 of a point, and we've seen that happen for the last 2 months in a row. If you look at small business confidence level, it edged lower again by slightly to 90 basis points. Target here is to be well above 100. So until that starts going the other way, there's still concerns about business confidence. Consumer confidence level, it inched up a little bit to 103. It's above that 100 mark, which is still good. So there's still some positive. The good news is on the oil side, which is interesting, is that the oil in March closed out around $76 a barrel, and it closed out yesterday at $76.05. So the good news, it's basically flat and remaining the same. So hopefully we'll see that continue in spite of the cut in production. Housing starts across the country were down by 0.8 of a point in the month, and basically housing starts are down 17% since March of 2022. If we look at the home sales, we saw that home sales were up by 9.6% in March, which is a good month. Then turning to Southern California, in LA County, the price range of the averages of 7.8% decreased by 1.2%. And of course, sales were up about 40% from where they were a year ago, actually the prior month of February of this year. However, they're down about 30% from March of 2022. Orange County, we saw the home prices were about $1,250,000, and the price increased by 7.9% in March. Sales were down substantially in this month, and they were down about 30% from where they were in March of last year. And then finally in San Diego, we saw the selling price averages at 915,000. That was up by 4.6%. Saw a slight increase in sales in the month of March. However, they're down 32% from where they were a year ago. So like we said, the high interest rates, mortgage rates are still having an impact in the market. Yes, there's a lot of activity, a lot of things are being sold, but not at the same level. Hopefully, as we move forward into the year, we get into May, June, and July, hopefully we'll see better activity. Now, the construction spending, as I mentioned before, was down by almost 1/10 of a point, and we've seen that happening, and we'll see what happens going forward. Keep in mind, I mentioned last month that companies such as Microsoft, Google, etc., have all curtailed expansion in their corporate offices and their businesses. So they're putting things back on the shelf for right now. They're not going to do expansions. So that's having a lot to do with construction projects as well. The productivity index, again, for the first quarter has not come out. We should have that probably sometime in the month of May. Now, this is another area of real consideration here, and it's what we call it company displacements. So 2 months ago, it was a disaster. But this time we've seen it was lower last month, but this month, here's what's taking place. So early in the month, Bed Bath & Beyond announced they were laying off 1,000, and I'm going to talk about that later, what's happening to the company that filed bankruptcy. We have McKinsey, which is a consulting firm, that's 1,400. Electronic Arts, which is a major game company in the Bay Area, 800. We saw Walmart Corporate, 1,000. General Motors did buyouts of 5,000 people, and Walmart, the warehouse areas, have laid off 2,300. This is the big shock. UBS Bank, as you remember, in Switzerland, bought Swiss Credit. And basically, in Switzerland, they laid off 11,000 people last week, and worldwide, they're laying off another 25,000, including the United States. So overall, they've laid off 36,000 people in the last week. David's Bridal is going bankrupt, and basically that's going to close probably sometime in the near future. That'll cost 9,000 jobs. Ernst & Young, one of the big four, Mr. Crowdy, Tom, laid off 3,000. Deloitte & Touche, 1,200. And Lyft, 1,200. Disney, 4,000. And then 3M last night, or 2 days ago, 6,000. So we're seeing companies continue to lay off. There's a lot of companies laying off less than 1,000 people. It's not worth talking about. There's too many of those. Now, what I'd like to do is talk about mergers and acquisitions. It was kind of a quiet month this month, but what happened is that Extra Storage is acquiring Life Storage for $2.7 billion. That'll make that storage company the largest in the United States. Now, if you look at Merck, they're buying Prothemus for $10.8 billion to boost their pipeline. The company is involved basically treatment for immune diseases, as the best-selling cancer drug that they have at Merck is facing its patent cliff. So when that patent comes off, it becomes more of a genetic product. So again, here you can see M&A taking place, again, as I said earlier, in the biotechnology space. So what other significant economic news? If anybody has driven a Chevrolet, and I think Sid's driven hundreds of them, Chevrolet will end the Camaro production in 2024. So after that, they're going to go to other vehicles that are strictly for electric vehicles. So the Camaro will come to an end next year. In San Francisco, the office vacancy rate now is running at 29.4%. That's the highest recorded on record. And Silicon Valley Bank, as I said earlier, they're now a division of First Citizens Bank, and we'll see how that goes going forward. They're staying open, and we'll see where that goes from here. There's still a lot of other banks, as I mentioned, that we'll have to see what happens going forward. Now, one of the things that's a big concern is that the U.S. corporate bankruptcy filings spiked in March. We're seeing a lot more companies filing bankruptcy at different levels. And basically, this is the highest amount of bankruptcy filings we've seen since 2010, 13 years. It's not a good sign in the economy. The banks now could begin canceling lines of business credit pretty soon because of the concerns about balance sheets with the debt, overwhelming debt versus and liabilities versus their assets. So you're going to see banks beginning to tighten this down. This will have a major effect on small to mid-sized companies going forward. Now, we've talked about chat, GPT, listings and so forth, but what's happening right now is that Microsoft is working diligently to come up and finalize this product. Now, Challenger Gray and Christmas, which is a major, basically a company involved in where people are laid off, basically, what they're saying is that this technology will replace positions that are either repetitive or predictable. And the projections are that sometime in the not too distant future, within a year or two, that 4.8 million jobs will be eliminated by this new technology that's going to market through Microsoft. Now, Tesla is building a new factory for batteries in Shanghai, and that's being done in spite of the fact of the tensions brewing between the United States and China. And as I mentioned earlier, the concern we have about consumer bad debt loans, I think this thing is just at the very beginning. I think we're going to see this number climb up substantially over the next 9 months of the year. Now, Walmart, Target, and other retailers are shuttering stores to overwhelming thefts. If you look at San Francisco over the last year, a lot of these, for example, are basically, if you look at Walgreens, they've closed them all. They're closing Walmart. They're closing, a lot of stores are closing because of theft. And what you're seeing happening now is that Walmart, for example, they closed four stores in Chicago about a week ago. They're going to be closing more stores in areas where the theft is alarming. And you're going to see more of that taking place in the retail industries. Now, I mentioned David's Bridal. They filed for bankruptcy again, and the expectations are that they'll permanently close all 300 stores within the near future. Bed Bath & Beyond, which is a store that we've all visited and purchased products from, basically started in 1971, and at this point they filed bankruptcy. They're hoping before June 1st to find a buyer to inject capital or take over their assets, but more than likely, all 360 stores of theirs, 120 what they call the Buy Baby locations, will close, and essentially almost 14,000 people will be displaced. So again, there's another retailer that's going south. So what I'd like to do now is open up to questions and answers.